So hello, my name is Mary Alice Scott, and I am the Public Affairs Manager at the Maine Association of Nonprofits. And I am really grateful that you all are joining us this afternoon. By now, probably a lot of you have heard about the Employee Retention Credit. If your nonprofit has not yet taken advantage, there is still time. We are joined by a professional consultant with the National Council of Nonprofits. And Stephen Wolf will help answer your questions to learn if you qualify and to take steps to claim the credit. So you can see Stephen on screen there. So Stephen is a tax attorney and a consultant to the National Council of Nonprofits. Prior to his work with NCN, he was senior tax counsel at the Jewish Federations of North America, and he spent almost 20 years in the national tax practice of accounting firms of Coopers and Lybrand and PricewaterhouseCoopers. So Stephen is well versed in tax and accountants, and so we're really grateful for him to take the time and answer questions. He's done a few of these in different states, and so really grateful that you are offering up this time to answer questions for the nonprofit perspective on the employee retention credits. I'm going to hand it over to Stephen, and we'll let him do the presentation, and then we'll take questions at the end. All right, thank you.
Thank you, Mary Alice, for the invitation, and thank you all for attending. And as Mary Alice indicated, this is a subject I think many of us have been hearing about. There's been a lot of attention on radio and television, offering up to $26,000 per employee for the ERC. Accounting firms and other types of consulting firms are starting to get into this this business, if you will. But the good news is that the ERC is available to many employers, including nonprofits, and in order to help with the cost of dealing with COVID. And the bad news, again, is that some of these so-called ERC mills may be promising too much. So we'll try to separate the fact from fiction over the next half hour or so and talk about the credit. But before, I just want to mention the fact that your Senator, Angus King, was extremely helpful with the nonprofit sector, both ensuring that we could qualify for the payroll protection program as well as the ERC. And we worked with many national nonprofits and local nonprofits to secure this during the CARES Act. But he was a very, very good colleague and advocate for the sector. So I've titled this, "It's Not Too Late," but time is starting to run. So I think that you want to think about taking steps to really analyze to see whether or not you are eligible for the credit. So as we move to the next slide, we can see an overview of the ERC and what sort of an overview of what we'll talk about over the next several minutes. And that'll be summarizing the credit, trying to put some examples from the nonprofit perspective to make the conversation maybe a little bit more relevant. Instructions on how to determine if you're eligible and to calculate the credit, although this won't be a tax form and accounting exercise. You do need to know some of the basic rules. And then directions again on how to claim the credit, including where to go to find forms and which professionals can be of assistance to help you make these filings over the next several months. And on the next slide, we have pretty much summarized in a nutshell the ERC rules. It is a refundable payroll tax credit available for eligible employers. And what we mean by refundable is that if you have credit amounts based on salaries paid to workers that exceed your payroll tax credit liability, then you can get those dollars back from the government. So it's a fully refundable credit. So you zero out your payroll tax obligations and then can receive additional dollars. Now the credit is applicable to wages paid to employees, both part-time and full-time, after March 12th, 2020. We forgot one of the twos there, and before December 31, 2020. And there is a 50% credit for 2020 based on qualified wages up to $10,000 per employee per year. So that would be a maximum credit of $5,000 per employee. The credit was expanded at the end of 2020 for the calendar year 2021 to include wages paid through the first 3 quarters of the year, from really January 1 through the end of September. And it is now a 70% credit per quarter based up to $10,000 per employee. So that would be $7,000 maximum per quarter. So if you qualify for all 3 quarters, that would be $21,000 per employee. So that gets you to the $26,000 that you may be hearing about in some of these advertisements. And again, you reduce your payroll tax liabilities all the way, matching either the forms 941 that you've sent in quarterly for your employees, and then for any excess that will be sent to you as well. Now, the next slide really talks about who qualifies for the credit. And this is really sort of the nub of the issue here. There are 2 basic tests for the ERC for both years 2020 and 2021. There is the so-called government mandate test, where an employer needs to either fully or partially suspend their operations due to a government authorization under COVID-19 emergency procedures. So it's important that you be able to cite the government agency, either the state, county, in some cases municipality, that may have issued that order that would limit commerce, limit travel, group meetings, etc., all due to COVID. So this is not a voluntary closing of the business. This has to be in response to a government order. The same test applies for the 2021 credit for the first 3 quarters, again, for fully or partially suspended operations. I think many organizations had to suspend their operations clearly in the end of the first quarter, calendar quarter of 2020, probably the second quarter as well. So many businesses, many nonprofits are going to qualify under that test for 2020. However, I think many of us initially thought that for 2021, that test may not apply because many of us were back in business, so to speak, and we're back in some sort of operation. However, if you are fully or partially suspended, then you can still qualify under the government mandate test. And we'll talk about the partial suspension test, which can be very, very important for organizations in 2021. The other major way to qualify for the ERC is under the so-called gross receipts test. And that is basically a calculation of the gross receipts of the business or operation during each calendar quarter, and comparing that so that you're comparing for 2020, you're comparing second, third, and fourth quarters of 2020 with similar quarters in 2019. And you have to demonstrate that your gross receipts have declined by more than 50% in order to qualify for the credit. So your gross receipts went down by more than 50% in the second quarter. And if they are then in the third quarter also less than 80% of the third quarter of 2019, you would qualify to the gross receipts for the third quarter as well. Now, in 2021, the gross receipts test has been liberalized so that you only need to show a 20% decrease in gross receipts for the calendar quarter. So again, you would be comparing, for example, first quarter of 2021 with first quarter of 2019, second quarter to second quarter. However, you can also use the prior quarter. So for example, you could use the fourth quarter of 2020 to compare to the fourth quarter of 2019 and qualify for the gross receipts test in the first quarter of 2021 and be able to claim that up to $7,000 per employee. It's a little bit complicated, but it's very arithmetic in terms of gross receipts. And the other, I think, major issue here is that we are talking about calendar quarters and measuring under calendar quarters. So for many of us that may have been looking at fiscal years and not doing tests based on a calendar quarter, this is a difference. And again, it's January, February, March, first quarter, April, May, June, et cetera, as you go through the year. And now on the next slide, we've listed.
Stephen, just quickly,
Oh.
there was a quick clarifying question. Is it
Yeah.
when you're talking about the dollars per employee, is that only full-time employees?
No, part-time employees qualify as well.
Great.
But again, we'll talk about one important limitation in either the next slide or the slide after that. So there is an important limitation on the wages that are paid, but we'll talk about that. But the next slide talks about, actually, this lists some specific state of Maine government mandated orders and shutdowns. So the website that's listed on the slide links to the proclamations issued by the Mills administration responding to COVID-19. And there are two major orders that I've listed, which really required operations to be shut down, one in March 18th, one in March 2024. The cases rising in November indicates that there was a proclamation in response to the spike that happened in the fall of 2020 and basically required many businesses to sort of, again, if not shut down completely, potentially have a partial shutdown. And finally, I've listed just one, which I thought was important, updated guidance for houses of worship. This was again a liberalization, allowing houses of worship to start to open up, so indicating that the emergency is starting to end. So if you look at the website, there are many others that are not listed. The next bullet down, I think, is a very good summary by a reputable law firm that summarizes every one of the state of Maine responses to COVID-19. So again, you can track and see potentially if that mandate impacts the operation of your nonprofit and whether or not you could claim either a full or partial shutdown based on the mandate. And again, that's a hot link. So when you get the slides, you should be able to link to that law firm summary. And remember, there also could be local government mandates, either at the county level or even at the city and town level. I didn't have the time or ability to really go through all of those in Maine, but I think you also want to look and see whether or not there are any additional local government mandates, again, that required your operations to, if not totally shut down, again, partially shut down. And if you think about, nonprofit organizations, that have annual fundraising dinners or meetings in person or travel to, statewide meetings, et cetera, all of those can be deemed to be some sort of partial shutdown. And again, I think that for 2021, initially, many of us thought that a lot of organizations wouldn't qualify, but I think it's really worthwhile to look and see if there were some government mandates. And again, let me mention it right now. In terms of a partial shutdown, the IRS has indicated through a notice a definition of that. And actually, we'll get to that, I guess, in one more slide or two more slides. So I'll leave it to there. But moving to the next slide quickly, you can see how the ERC was expanded from its initial enactment in the CARES Act in March of 2020. At the end of 2020, there was a major expansion of the ERC so that organizations and businesses that had claimed PPP loans can also claim ERC. That was a key distinction in the CARES Act. A business had to either make a choice to claim either PPP or ERC. You couldn't claim both. But now, after this change at the end of 2020, you can qualify for both. However, The important thing to remember is that if you have used wages to qualify for the PPP loan, those wages cannot be counted for ERC purposes. So initially you would think that, well, that's going to wipe out all the ERC potential for the credit. But remember that the PPP was based on an 8-week test. The ERC is based primarily on a quarter test or almost a 12-week test. So virtually every employee is probably going to have at least 4 weeks worth of wages in calendar quarters where a PPP loan was claimed. So it's important to go back, look at your PPP application and how your loan was forgiven, and determine whether or not there are additional wages, and in most cases there will be. Again, we talked about the fact that it's only a 20% decline in gross receipts, and you can use the prior quarter to qualify, and the credit goes up to 70%. In early 2021, the credit was extended through the end of 2021. However, that was cut back in the infrastructure bill in November, so that you can only claim the credit for the first 3 calendar quarters of 2021. An important thing to remember, the last bullet on that slide, we'll talk about this toward the end of the presentation as well. The IRS now has 5 years to examine ERC claims. So for some organizations that are out there that have claimed the credit, and maybe some of these so-called ERC mills, 4 years from now, you want to make sure that your professional advisors are available to answer any questions that the IRS may have, if in fact there's an examination. And examinations have already started. We'll talk about that as well toward the end of the presentation. On the next slide, I've indicated some important points from Notice 2021-20 from the IRS. The IRS has issued probably 5 or 6 different ERC notices. They can all be found at www.irs.gov /coronavirus/employer retention credit. You can find these, or just if you just Google IRS and ERC, the link to the IRS page will pop up. But 2120 is probably the most important notice. Now, what they've determined in that notice is that you can qualify for a partial suspension of operations, which basically is a subjective test to determine whether or not, now you need an objective mandate, but subjectively, has your operation been suspended? The objective test that the IRS has provided is a 10% rule. So if you have a more than 10% decline in gross receipts in that quarter, compared to the prior year's quarter, or 2021 to 19, or if your total payroll hours have gone down by 10% in that quarter, then you can qualify for a partial suspension. Again, if it is in response to a government mandated order. So that's a little bit of an ease in terms of making the definition so that you can claim a partial suspension of operations. I've been involved with several private schools, several religious organizations, and this 10% rule has been very, very beneficial for them to be able to claim that there has been at least a partial suspension of operations for the entity in either the first, second, or third quarter of 2021. Again, that gets you the larger credit, that's $7,000 per employee. Another important notice in from the IRS is that if you had excess payroll that you had claimed on your PPP application and you didn't need it in terms of the actual amount of the loan that was forgiven. So for example, you had set an application of $400,000 and only $300,000 was used and forgiven, then the extra $100,000 would be available for ERC. Remember, again, you can't double dip and use the wages from PPP for ERC. And finally, probably the most important definition that's found in the notice is the definition of gross receipts for a tax-exempt organization. And again, this is a gross receipts test not net receipts. So you're looking at, for those that are familiar with the Form 990, it's Schedule 8, the revenue schedule. It would be all of the items on that schedule. If you file a 990 EZ, I believe it is, it's part 1 of the 990 EZ, which is on the front of the form, which shows you again gross receipts, including contributions, your members' dues, the gross sales of any business activity, including any UBIT, if you have a UBIT, unrelated business activities, asset sales, if you dispose of assets, and investment income. Again, this would be investment income that's realized based on, again, capital assets that are sold, interest, dividends, royalties, etc. And again, those are gross numbers that you're comparing apples to apples, not the net numbers. That's an important distinction in order to meet the gross receipts test. And that can be found again in Notice 2120. And there are several examples in the notice which describe some of these rules in more detail. Unfortunately, no of those examples apply really to nonprofits, which is why I think you have to look at the Form 990s to really see the definition of where the gross receipts can be found. And moving to the next slide, and we've got a few more minutes here. I'm going to try to get rid of it, rid of everything. This is just an example of what the calculations would have to be in order to basically compute the ERC. This is an Excel spreadsheet used by one major accounting firm, and you can see that you're looking at the payroll reports for each quarter, as well as PPP loans, the quarterly 941s that have already been filed, and then the PPP loan information, including the forgiveness and all the data entry that would be needed for each calendar quarter. In addition to this overall page, you would probably have a Excel spreadsheet for each and every employee. Again, listing their wages, wages used per quarter, wages used for PPP, and then wages eligible for ERC. So this would be an example of how you would go ahead and calculate the credit. The next slide talks about really the ways to maximize your ERC. So again, you want to collect and analyze the data for both 2021 and 2020, identifying each full and part-time employee for each month and each quarter, documenting their wages, and then you've got to coordinate with other types of benefits that may have been claimed under CARES Act provisions, including the PPP, the paid sick and paid family leave provisions that also allowed for some refund of payroll obligations for employers. But again, to the extent that you have used all of those additional benefits and still have excess dollars, those would be refunded to you through a refundable credit. Now, how do you claim the credit? You have to file the amended Form 990 for each quarter in 2020 and 2021. Claiming the excess credit, reconciling with the 941 already paid and payments that have already been withheld. The next slide basically has some frequently asked questions. Can we still apply for the ERC? Absolutely. The 2020 ERTC does not close until April 15th of 2024. So if you're claiming a credit, that 50% up to $5,000 employee, you can claim it up until 2024. The statute for the 2021 credit doesn't close until April 15th, 2025. But again, I would advise meeting with your outside advisors to figure out if you qualify for the credit, because you will have to file a Form 941X. That's the only way to claim the ERC at this point, because you wouldn't be in a situation where you would be you already filed your ERC, you already filed your 941s for 2021 already. How long does it take to get the refund? Well, here's where you have to be patient. The IRS is working diligently to go through their backlog, but there literally are thousands and thousands and thousands of these paper forms that have been filed, excuse me, in Ogden, Utah, and that's where they have to be filed. It can take anywhere from 6 to 12 months to actually receive the refund. I was saying to Mary Alice, I actually got a email this morning from a ERC mill, if you will, offering a ERC loan, basically saying, contact my organization, we'll figure out your ERC, we'll loan you the money within 72 hours and wait for the IRS to then provide you with the actual refund. I would be very skeptical of that. Of course, they'll be charging you probably an exorbitant rate of interest to do that, but you have to be patient, but you will get the money from the IRS eventually. Most organizations using gross receipts or the government mandate test. Again, I think mandate was probably the way to go for 2020. Gross receipts may be the way for 2021, but again, keep in mind that 10% test to qualify for partial suspension. Another quick page of facts on the next slide. Again, it's fully refundable. You don't have to pay it back to the extent that you get the money. It is your money. Again, the IRS has 5 years to come knock on your door if they think there's some fraud. But I think for the most case on nonprofit organizations, I don't think will be targets for IRS audits. But again, you want to ensure that you follow the rules and document everything. The PPP loan doesn't really impact the ERC calculation, except for the fact that you cannot double dip on the wages paid. PPP forgiveness does not count for gross receipts, so that won't throw you out of the gross receipts test from 2021 or 2020 if you got a PPP loan. That is not considered gross receipts for the test. And who's the best to really help you file? I would first go to your payroll provider to see if they are in these operations. I'd also talk to your outside accounting firms and your tax advisors. And I would be leery, quite frankly, of people knocking at your door claiming they can get you the credit without actually talking to your own advisors to make sure that, in fact, you do qualify. Now, the very last slide is next. And it will show you, this is actually now on the IRS website. They're basically warning individuals, or not individuals, but businesses and operations, including nonprofits, don't get conned by scammers. They're looking first at organizations that really, they are not listed with the IRS. They don't match up with a 990 or an 1120 to see whether or not there is an actual organization. But again, I think many of the organizations, in fact, I would think most of the organizations on this call can qualify and shouldn't be scared to go ahead and make the calculations, document everything, document the government order if you under government mandate, document steps that are taken by the organization, and document how you met the gross receipts test if that's how you're trying to qualify. We have started to see several IRS audits already in this area. And in the documents that they're requesting are basically those. They're actually asking what is the government mandate order that you are basing the shutdown on. Show us your calculations. Show us the amount paid in the 940 previously. Show us how you've gotten to the amounts that you're claiming on the credit. But again, put your ducks in a row, in order. And I think that, again, many organizations should be able to claim the credit, and you have almost a year to go ahead and claim it for 2021, for 2020, and over almost a year and a half, 2 years for 2021. So go ahead and make this. And I think you can get some dollars back for your organization that can help you achieve your charitable purpose. So with that, I don't know if we probably have a lot of questions. I covered a lot of stuff really fast. I have offered, if you have any specific questions for your organization, that's my email address and my phone number. I'll try to respond. I'm not offering tax advice. This is not sanctioned. This is not, you can't hold the National Council of Nonprofits liable either. I'm an outside consultant, providing general information, but I'll try to be more helpful if I can.
That's great. Thank you, Stephen. Yeah, we really crammed in a lot of information there. And I know we said we would end the event at 12:30, so if folks have to jump off, we will send the recording and the slides, and we'll try to answer questions via email and follow up as well. But if Stephen, you're available for just a few more minutes to answer a couple of the questions.
Sure, absolutely, absolutely.
Okay, great. One of them I just saw at the end, which I thought was a good one, is, are nonprofits still eligible if they receive federal government grants?
Yes. The federal government grants under the CARES Act do not preclude you from qualifying for ERC, and also those grant amounts will not be included in gross receipts. So that's sort of, two positive pieces of information. There's so you don't have to add that to your gross receipts for 2020 or 2020 if in fact that's when the grant came. So basically that's good news in terms of it doesn't throw you out of the gross receipts test.
Yeah, that's very helpful. And then Lauren O'Reilly asked, does closure of performances due to COVID apply?
Those are like an orchestra or a play, or it's absolutely. Now there is another CARES Act and post-CARES Act relief provisions for performing organizations, which is a whole separate type of relief that you can qualify for, separate from the ERC. And again, you can't double up on wages. But so I'd ask that individual maybe to contact me directly. We can talk about that because that's specific to performing arts, etc.
Great. Yeah, great. And then there was just a clarifying question that you don't have to meet the government mandate test and the gross receipts.
No, right. It's an either or. I'm sorry. Yeah, I should have made that very, very clear. It's one or the other. You can claim either partial or full shutdown or gross receipts, and you can switch back and forth. You could have one for 2020 and one for 2021. That would be fine. And again, many people would probably qualify under a shutdown for 2020 and may have to go under the gross receipts for 2021 because they were back in operation for most of 2021.
Great. Well, I think you covered some of the other questions that we had in the chat in the slides. And so I appreciate your attention to detail and all of this information. And I really, really appreciate you taking the time and offering to help folks via follow-up as well. Just to reiterate, that's not official advice, it's just general information. But thank you to Stephen and to the National Council of Nonprofits for that partnership. And for folks attending, you can look for your email for the resources that we'll send out. And I appreciate all of you tuning in, and do reach out at the email that Molly put in the chat if you're having difficulty looking for additional resources that we can point you in that direction. Thank you all very much, and we'll see you at another time. All right, bye.
Thanks so much.